Can the future be predicted and a fortune amassed solely through numbers and algorithms? Chern-Simons' story will prove that the answer is a resounding yes. He stands as the greatest investor in history, outperforming even the likes of Warren Buffett, George Soros, Peter Lynch, and Ray Dalio. Simons, a mathematician, unraveled the secret to making a significant fortune in the stock market. How did this solitary scientist manage to conquer Wall Street? Stay with me as we unveil the astonishing tale of the genius who predicted the future of finance. Chern-Simons holds the 25th spot on Forbes' list of the world's richest people, boasting a fortune of $30.7 billion. Yes, mathematics was the key to his company's success. Renaissance Technologies focused on high-risk investments. But years earlier, his life was quite distant from the stock market's buzz. The genius of applying mathematics to finance was born in Newton, Massachusetts in 1938. His love for numbers blossomed in 1955 when he enrolled at MIT to pursue mathematics. At just 23, he completed his doctorate at the University of California, Berkeley. He joined the Institute for Defense Analyses, a top-notch cryptography group at Princeton University. Their work, still classified today, involved decrypting Russian communications during the Cold War. He was dismissed for expressing anti-Vietnam War sentiments, but shortly thereafter he returned to academia. After teaching at Harvard and MIT, he became the director of the then unremarkable mathematics department at Stony Brook University. But within just a few years, the department transformed into an international benchmark, and Simons himself became one of the great mathematicians of his time. In 1974, at the age of just 36, he formulated the renowned Chern-Simons theory, a sophisticated quantum model later integrated into string theory. For this achievement, the American Mathematical Society awarded him the prestigious Veblen Prize in 1976. Initially, Simons balanced his university work with his new role as a stock market investor. Yet, he soon realized he had to make a choice, and he chose wisely. In those early days, it was widely believed that the ups and downs of the market were essentially random. Brokers would rely on reading economic news and speaking with company insiders to gather information. They trusted their intuition above all else. When Jim first entered the currency market, he took the same archaic, gut-driven approach. But the apparent randomness of stock movements left him frustrated. He became obsessed with finding a pattern, a deeper structure, a way to predict the next move. Jim decided he wanted to be a millionaire, but in the most convenient possible way. After all, he was a brilliant mathematician who sought the certainty and beauty of exact sciences. He convinced his friend Leonard Baum, an expert in predicting chaotic scenarios, to become his first business partner. They aimed to implement a quantitative model based on Jim's mathematical formulas. He was determined to bring an analytical approach to investing rather than relying solely on experience and feelings. In 1982, they founded Renaissance Technologies Corporation, a private investment firm based in New York. But they were still unable to crack the code. A couple bad stretches caused Baum to leave, and Jim thought about quitting too. But first, he wanted to try one last time. Jim hired a small array of physicists, mathematicians, programmers, cryptographers, and computational linguists. Among them was James Axe, another brilliant mathematician Jim knew from Stony Brook. Together, they started a new firm called Axcom Trading Advisors. None of them had Wall Street experience. Some even flirted with anti-capitalist ideas. Their goal was to develop sophisticated mathematical formulas, what we now call algorithms, that could predict market fluctuations and build self-driving investment models. The goal? Not having to constantly watch the market. Instead, the models would make money while he slept. Literally the dream. Chern-Simons wanted to build big data even before Zuckerberg was born. To construct the models, they needed tremendous amounts of data, not just a few hundred points, but reaching back to records from 1700 at the World Bank and Federal Reserve. This is how they began applying the quantitative analysis Jim had always dreamed of. The machine made its conclusions based on mathematics and science, while human work was limited to following its lead. Thus, the great secret of the mathematician and his partners was isolating a single variable in all their operations: emotion. In other words, the human factor. So, Chern-Simons' investment method is based on finding patterns in the market, that is, movements that repeat over time and can therefore be predicted to gain a profit. Once these patterns are identified, he tests how effective they are through backtesting algorithms, as it is known in quantitative analysis. As the basis for algorithmic traders, Simons' approach benefits from his outstanding skills as a mathematician. This grants him access to more mathematical models that allow for predictions sustainable over longer time frames. Additionally, the models are dynamic. What may accurately predict price movement today could fail in the future. For this reason, the model must be adjusted as the market changes. This is because, through his research, Simons found that commodities, for example, used to maintain strongly defined trends, but those trends are now much weaker. Therefore, a trading model or system that worked very well in the past may no longer perform as well now. But if the model adapts to changes and identifies what's working best in each situation, then the model can remain profitable over the long run. By continuously evaluating and updating the models based on the latest market behavior, Renaissance Technologies ensures they stay effective even as trading conditions evolve. This dynamic approach, where the models learn and adjust automatically, is what allows Renaissance to maintain an edge over the decades. For a long time, they had better and cleaner data than anyone else, and that was a huge advantage. After refining their algorithms to perfection, Renaissance proved their founders' hypothesis correct. The hidden structure was indeed there, and it was a genuine money-making machine. Their method was on the verge of revolutionizing modern finance. Their algorithms could outperform the market and started consistently generating profits. This was all thanks to high-frequency trading, or HFT, a system now used for most exchange operations. Computers make decisions and execute millions of orders within milliseconds, detecting trends. In fact, today, quantitative investors are the majority, controlling over 30% of global stock trading. But no one does it with Renaissance's sheer capability and skill level. By validating the potential of mathematical models to forecast financial movements, Chern-Simons opened the door for algorithmic trading to become the dominant force, shaping markets worldwide. He had truly transformed investing into a quantitative science. With over $130 billion in assets from institutional clients and a minimum $5 million investment requirement, Renaissance remains one of the most successful hedge funds globally. And because of the fund's high returns, some vehicles have emerged that slice up shares so smaller amounts can be invested, though at around $125,000, it's still a large sum for most individual investors. Renaissance isn't just a top-performing hedge fund of the last decade, it also demonstrates the current state of the economy and finance. Among its 275 employees, there is not a single economist. Most of the staff are programmers, physicists, and mathematicians. In this way, Simons has truly transformed what was once Axcom trading advisors into a money-printing machine through high-frequency trading. What began as Axcom would later integrate into Renaissance Technologies, giving rise to the Medallion Fund in 1988. An even more exclusive and lucrative vehicle, it was based on Baum's work utilizing contributions from Axe and Berkeley professor Jim Berlekamp. Together, they cracked the magical formula, as secret, if not more so, than the formula for Coca-Cola. Since 1998, Medallion's results have been undeniable, averaging 66% annual gains, 39% after fees. It is the investment fund with the best historical returns ever recorded, meaning $10,000 investing using their system would now be worth over $200 million. However, if you are considering joining, I have some bad news for you. Medallion does not accept outside clients. Only current and former Renaissance employees can invest. Chern-Simons has undoubtedly rewritten the rules of investing through the unparalleled power of his mathematical methods. His success forces us to reconsider what is truly possible when data and science are applied with genius-level skill. While his $30.7 billion fortune is smaller than some of his Wall Street peers, no one has achieved better investment returns in recent years. Who wouldn't do whatever they could to get into Medallion? After revolutionizing Wall Street through the power of mathematics, Chern-Simons quietly retired in 2010. His success was key in pushing the industry towards systematic, algorithmic models. Now nearly all trading is done by robots. That's why algorithmic trading is seen as superior to discretionary or manual trading, not just in performance, but also in scalability, learning curves, and discipline. Chern-Simons is undoubtedly the greatest investor of all time. A brilliant crypto analyst who one day decided to crack the code of predicting stock behavior and succeeded. He proved markets can be mathematically modeled and conquered. In the process, Simons not only printed his own money, he permanently transformed global investing as an industry. His story of intellect, intuition, and grit is one for the history books. So, did you take notes on what we can learn from Chern-Simons' methodology? Drop your comment below to share them. Be sure to like and subscribe if you enjoyed this video. Thanks for watching, and I'll see you in the next one.